All right, guys, you're going to start hearing the term reverse carry trade a lot. And so in today's video, I want to explain what that actually means and how it can potentially impact the economy and the crypto space specifically, because again, this is a term that we're going to hear a lot in the upcoming days. Now, if you're new here, welcome to my YouTube channel. My name is Donnie Joseph. On this channel, we talk about crypto, investing, wealth, health, mindset, and all of the above. Okay, the reverse carry trade. First, let me explain what a carry trade is, okay? A carry trade is when investors, large investors, can go and borrow large sums of money at a very cheap price. They take the money, they invest it somewhere else where they're earning more than what it's costing them to borrow it. So for example, let's say they go and borrow $200 billion at 1%. They go and invest it where it's earning 5%. The spread on that is 4% in terms of what they're earning. The reverse carry trade is when they have to start paying that money back because something came up, there's volatility, and they have to pay it back very fast. Why is this term going to be coming up? Well, now that we're at war with Iran, the Strait of Hormuz has been closed. This is where 20% or so of the global oil supply comes from. When that strait gets closed, it's going to drive up the cost of oil. When the cost of oil goes up, everything starts getting more expensive. But how this reverse carry trade works is that Japan, since the 90s, has been lending out money to these large investors at nearly 0%. Those investors have been taking that money and investing it elsewhere, hoping to make a return, right? This is what they do. This is how money is made. With the oil prices increasing, which they're already starting to increase, they were like at 70-something dollars last week. They've already went up like 9%. But let's say they go up to what they're projecting, $180 to $200 a barrel. That's going to get very, very expensive to buy. Japan is going to need to raise their interest rates so they can no longer be at 0%, which I don't think they're at 0% anymore. Don't quote me on it, but they've already raised it slightly, I believe. So let's say they have to raise it significantly. These people that have been borrowing, these countries, these entities that have been borrowing this money very cheap, when Japan raises the price of interest rates, it's now costing these guys more money to borrow. So they're going to want to pay this back very quickly. How do they pay it back? They have to sell assets. And this is where the conversation of like things like Bitcoin, gold, all these things are going to need to get sold so that they can make good on their debts. Now, there's a whole different video that we can make. If you're familiar with Jake Claver, he has this, what's called, I think it's the domino theory, where with the reverse carry trade, when it starts to unwind, this is one of his arguments of what is going to drive the cost of XRP up substantially higher. Again, that's for a conversation for a whole nother video. But his argument is that XRP is going to go to a high price because these people will need to pay this money back very quickly, and they can do so utilizing XRP because they can, it doesn't cost as much money to move XRP. So if you're an XRP holder and you believe in Jake Claver's theory, then this is good news for you. But with this reverse carry trade potentially unwinding, the main thing for us is to keep an eye on the cost of oil and to keep an eye on what Japan is doing. That's going to say a lot, okay? So here's what I would advise, and well, I shouldn't say what I would advise because this is not, I'm not a financial advisor, but what I'm doing is I'm just keeping my house in order, okay? I am ensuring that all of my debts are paid off. I'm not going out and buying new things. I'm not frivolous spending. If oil prices go up, that can cause the cost of gas prices to increase significantly. If you live here in the United States, you already know that things are very, very expensive right now, and that's mostly due to inflation. The cost of living feels more expensive. To get groceries is more expensive. And again, if gas prices become more expensive, that's just one more thing that you're gonna feel. So in a time like right now, what I'm doing is ensuring that I'm paying down all of my debt. So credit cards that I've been just sort of letting sit on the sidelines that have been um, with interest because I've been using some money to invest. Those things I'm attacking with like full force energy. I'm paying down those credit cards. I'm eliminating that unnecessary spending. I'm also keeping some cash on the sidelines to take advantage of if and when the market retracts. I want to be able to take advantage of that, okay? So if let's say Bitcoin drops significantly, I'm going to jump into that. If XRP drops significantly, I'm going to jump into that. So I'm keeping some cash on the sidelines so that I can take advantage of these fire sale prices, okay? And again, the point of this video was just to give you a brief understanding of the reverse carry trade. I hope that I was able to articulate that in a way that it made sense. If it did, please let me know in the comments. And that's it for this video. So I appreciate you. Thank you for watching. And until next time, we'll talk soon.